glad to see your name in here, Don.
Can you hear me?
I can, Don. How are you?
Oh, wonderful, Dale. I think my microphone just came on. I was getting nervous myself that you weren't going to be able to hear me.
You're coming in loud and clear. Thanks so much for wanting to come back and do this again with me.
Oh, you betcha. I've been looking forward to it. I really appreciate what you do on the Twitter service. It's just terrific.
Thank you so much, Don. And you know, we've been through the journey part of it, and I know that I believe you're talking about a Rainmaker. I saw that tweet. So
good.
Can you describe to our audience what a Rainmaker trade is?
I can. I thought I would start, though, by talking a little bit about what my philosophy at 7sentinels.com is, or what my philosophy as a trader for my whole life has been.
You're the boss.
Then we'll get to the Rainmaker.
Okay.
Early on in my career, it occurred to me from all my studies of the greatest traders of all time, like, of course, Jesse Livermore, that the only thing that really, truly matters to a trader is the direction of the market. Everything else is noise. The direction of the market is really everything. And you know, Livermore had said that there isn't a bull side to the market or a bear side to the market. He said there is only the right side to the market. Right. So I've spent my life devoted to the proposition of identifying the right side of the market, getting on the right side of the market, and staying there. And Livermore also said that in a bear market, there are plenty of early bulls, but the man, of course, today we would say the person who can be right and sit tight is really rare. And so I wanted to talk a little bit about why that is. Being right is one thing. And we all endeavor to do that, and we all find our ways of doing that. But sitting tight, that's quite another animal. It takes conviction, it takes discipline, and it takes continuing trend measures that work. And that's really what we are all about at 7sentinels is identifying the trend and then having the conviction and the tools to keep us on that trend for the duration. Okay, the Rainmaker. By a Rainmaker, I mean, if you take a look at, let's say, Livermore's career, I think you may know that he started in the late 1800s as a teenager with $5, literally, to his name. He started trading. By 1906, his account was worth $3 million, and that's the equivalent today of about 40 million in today's dollars. And after the crash of 1929, his account was worth $100 million, or the equivalent of $1.1 billion. He did that from $5. How you do that is quite a trick. And again, it takes being right and sitting tight. By a Rainmaker, I mean, you know, we all think about from time to time how great it would be to find a trend, identify a trend, get with it, and have it be the real thing that really it makes it for us. We've heard many stories about people that did that in the past, like Livermore and others. But we always think, well, you know, that was another time, or that will be a time in the future, but not now. And what I'm saying is we are, according to my work, on that Rainmaker right now. This is the big one, in my opinion, that started in January of 2018. Now, currently, just to put that point aside, we're in a counter trend rally within that. that downtrend. But this is, in my opinion, based on my lifetime work, the big one right now. So that's what I mean by Rainmaker.
Okay. So is it because a lot of the sentinels are off duty right now? And Don, do you see any shot of, I thought the NASDAQ 100 had a shot for maybe one more high to get a third drive. Someone else who's pretty good, what's his name? He does pivots, was looking for about 69.90 for a right shoulder.
I would not be one bit surprised to see that at all. And the reason, the one thing that is frankly out of place, it hasn't fallen into place just yet, to tell me that we may have seen, or that we have seen the final high, which, as you imply, indicates maybe it's still out there, yet to come, is the advanced decline line. The advanced decline line right now, this morning, I believe, is making another new high. I know it was only 300 units away. I don't have my screen in front of me. I'm looking at some other charts and things, but I don't know what the advanced declines are this morning. But if we have more than 300 net advances on the New York Stock Exchange, the advanced decline line is right now, as we speak, making yet another high. And that would imply exactly what you asked, Dale, that perhaps we have one more, what I call unconfirmed new high ahead of me before it starts falling apart in earnest.
Okay. So let me ask you this. When it comes to the NASDAQ, a lot of people don't like or talk about the erosion of like triple leveraged, bearish ETFs, bullish ETFs. What's your choice of instruments to take advantage of a bear market here?
Well, I do like the leveraged ETFs because they don't have the time erosion that options have. Okay. They don't have the relatively unlimited risk that futures have.
Good point.
And they don't have the inverse ETFs don't have the inconvenience of trying to go out and borrow stock.
All very good points. Do you use Quid for NASDAQ or what else? For
NASDAQ, I use the SQQQ, which is a triple leveraged NDX 100.
Okay.
And on the long side, the TQQQ, which is a triple leveraged bull side ETF for the NASDAQ 100.
Do you have do you diversify? Like for example, Don, the Russell is just a stone's throw away from new high.
Right.
It's had a lot of relative strength. I don't know if it's related to this dollar rally that we've had. It seems the Russell does better when the dollar's doing better.
Exactly.
And the transnationals don't do as well because they're losing the currency war for exporting. Do you expect a continuation of relative strength in the Russell? And what are your preferred shorts going forward? Also, do you have any time or is it price that you're looking at to initiate these positions?
It's really direction. It's always direction. When I have sell signals, I sell, and I don't ask why or where we're going.
Okay. Are you on one now? Are you on one now in NASDAQ?
Well, right now I'm long the market because we are in the counter trend rally. Let me talk about 7 Sentinels for a minute. The 7 Sentinels are, as I said, my attempt to answer the question of what is the right side of the market. And I've only spent about 45 years coming to the that particular instrument as my choice of answering that question. But the 7 Sentinels are 7 measures of market internals that I have discovered when all 7 go to an uptrend at the same time, that identifies a trend change to the upside that will stay in effect until all 7 go to a downtrend, which will identify then a turn to the down that will stay in effect until all 7 go back up.
Okay, so you need all of them to be confirming the
Yes.
direction. Does that
Yes.
usually get you into the market? Well, obviously you're not going to buy like an inflection point because it's going to take time to get your troops all to line up, right?
Correct. But now recently I've done a lot of work in developing 7 sentinels in 3 different main time frames. Originally, I made them daily indicators. I would measure the 7 sentinels on a daily basis, and when all 7 would give me a daily close that was on a buy, that would be a buy signal for the market, and when all 7 went to a sell, that would give me a sell signal for the market, and those were on a daily basis, and they would tend to, when I'd get a daily 7 sentinel signal, it would tend to stay in place for typically 4, 5, 6 months or more.
From your daily time frame.
Yes.
Okay.
I have now developed, I began developing last year or the year before a short-term sentinels measure that uses the 2-hour measure. I call it the STS, or short-term sentinels. And I now have found that my short-term sentinels are better for
swing,
determining my trade itself, yes, than the daily. What I do is when I get a short-term sentinel signal, I go with it, and when it's confirmed by the daily, I'll go up to 100% long or short. When this daily is not confirming it, I'll limit myself to 50% long or short.
Interesting. Nice.
Now, recently this year, I have discovered that the weekly 7 sentinels is a beautiful instrument for telling us when the primary trends change. When we get a primary bear market starting, we'll get a 7 sentinels weekly sell signal. When we get a primary bull market starting, we'll get a 7 sentinels weekly buy signal.
Let me ask you on back testing, are you usually, when you go out and use your telescope on the weekly and your sentinels are astronomers, longer term, do you miss the first 10% move for all your weekly soldiers to line up in formation?
Well, interestingly, on this latest signal, it occurred on, what was the date? I think it was February.
Okay.
February 4th.
Oh, yeah, so you got it right near the top.
Either. It was actually February 17th. So it was, it was what, 2 weeks after the down move really began. The beauty was, though, that my daily had gone to a sell back on January 30th, and my STS had gone to a sell back on January 29th. So that's the beauty of it. They kind of fall like dominoes when.
So you kind of when you have confluence of time frames. I know with the stuff I do, I like to have, you know, I'm shorter term than you. The 4-hour and the 1-hour divergence setups in agreement with each other. So you had one of those probably pretty rare signals where they all line up together.
Definitely, and that's definitely true, Dale. And that's exactly why I use the rule of only going to 50% when the STS is out there all by itself, but I'll go to 100% when the daily backs it up and is in agreement.
So which of your time frames has you on a long right now? Is it
the
weekly?
STS is on a long and the daily is on a long, and that surprised me, frankly. I didn't expect to see the daily go to a long, but I am 90% long right now, and I got there on Monday. On Monday, I began to see the signal falling into place and started covering. On Tuesday, when I got confirmation that it was indeed in place, I started going long, and then yesterday I completed most of my buying and have gone to 100% long.
Okay, so let me ask you this then, Don. Is it strictly the stock market? Do you do anything with sectors, or it's mainly just the general averages?
I do this. I follow the I use the Standard & Poor's 500 as the basis for the 7 sentinels themselves.
Okay.
I watch that closely. I watch the Dow Jones Industrials closely. I trade the NASDAQ based on signals within the 7 sentinels that are unique to the NASDAQ. And I also trade the Russell 100. Oh, and you asked a question, do I think that the Russell 100 is going to lead the way or
Well,
make new highs? I think it's going to.
Yeah.
I think it's going to make new highs here because it's so doggone close right now when all the others are so far down.
Have you noticed that correlation? Strong dollar, strong Russell, weaker dollar.
Well,
go ahead.
To be perfectly frank, I had not been watching that, but I did read a couple of comments to that effect in the last couple of days and started paying attention to that. It isn't something that had gone across my radar screen before the last couple of days, but for sure that is happening. And I'm sure there's a logical explanation. I haven't really thought that one through.
All right, so we know that you have a long-term bias, but the weekly is still on a sell signal.
Yes. Well, the weekly is on
daily
a sell. Yeah, the weekly is on a sell, which would indicate to me that the bear market has begun.
Okay.
The daily and the short term are on a buy, which indicate that we are we're in a counter trend rally now within the bear market.
Okay.
Now,
so do you have? So you don't have any price projections. You're just going to stay with the long until your short term and daily flip. And let me ask you this: what are your expectations for this Rainmaker once the daily and short term start lining up with the weekly?
I often say in my comments on the 7 sentinels that I never trade on my expectations. I only trade on my signals, but like everybody else, being human, I have my expectations, and I expect that this bear market is ultimately going to be more serious than the 2008 bear or the 2001, 2, 3 bear.
Okay. Okay.
And the reason I say so relates to another article. If anybody is interested in taking a look at the 7 Sentinels website, there are a number of pages at the top that are available to anybody to read.
Why don't you show that, Don? Can you show your website and those pages?
Now, are you looking at the page now that shows a chart with some lines, vertical lines on it?
Yeah, the NASDAQ. Yes.
Yes, indeed. Okay. Let me put the website here. Here is a look at the 7, you can see that, right?
Yeah.
7sentinels.com. Okay, you see up in here where my mouse is, those are all articles that are open to the public to read anytime they want.
Okay.
The one that you have made reference to, I highly recommend for anybody to read because there's a lot of information in there. And that's the one called Rainmaker. It's lit up right now, as you see.
Yeah, we could, the world is starting to understand water shortages. So I know Rainmaker is a metaphor for financial windfall, but it's an interesting metaphor that there is a shortage of rain, and that has a lot of people very bullish agricultural markets.
Interesting. Yeah, I hadn't thought of that connection, but that's so true. I've always liked the term since I saw that movie with Dan DeVito and what's his name? Anyway, about the attorneys that took on the insurance company.
Oh, yes. Okay.
That movie was Rainmaker.
Yeah, I think wasn't that Matt Damon was in there?
Matt Damon, exactly.
Yeah, okay.
That was a great movie. I love movies like that about,
poetic
David and Goliath.
Yeah, Don Quixote. Maybe we see ourselves as Don Quixotes, trying to battle the windmills.
I think we do. Okay. I think we do because we are up against some pretty massive forces all by ourselves.
Okay. Well, what a beautiful looking website, Don.
Oh, well, thank you. Thank you. But anyway, up at the top of the top of this page are a couple of articles, one called Rainmaker that I highly recommend, because in this article, down within the article here, as you see, I give a list of
your 7 sentinels.
No, I give a list of 10 things that occurred between November 2016 and January 2018 that were all-time record warnings or bull market top indications that we had never seen before, ever.
All those Hindenburg omens that just kept gliding across the country as people sip champagne. That never blew up, right?
Exactly.
Okay.
We had more Hindenburg omens in 2017 than in any other prior year ever.
I lost money being bearish in 17.
We had more black swan. We had the highest, second highest, and third highest black swan indexes from the CBOE Black Swan Index in 2017. And just all sorts of records. The lowest the lowest VIX ever, the highest greed measures ever, and so on and so on.
And probably the biggest presidential cheerleader for the stock market in America's history.
Right. Yes.
I mean, have you ever seen that before? I mean, I never saw the Bushes or the Clinton or Obama or Reagan, any of them, take credit for a bull move in the stock market.
Oh, I know. And I kept thinking all through November and December, when our president kept saying, and the Dow has made another high, and it's made all-time record high 57 times this year, or whatever it was that he kept saying every day. I kept saying, wow, he's in dangerous territory, because if he's going to take credit for the new bull market highs, he's going to have to take credit for the declines when they come.
No. He's going to blame you, Don Mead, and your 7 sentinels.
Yeah,
so,
you're right.
Look out for that NSA. They're going to go, except for Don Mead, this market still would have been going up. But Don,
he's probably going to say that I'm working in tandem with Hillary Clinton on that.
Thank you so much for coming back. Any last thought you want to wrap it with?
No, other than I would highly encourage anybody that's listening to read 2 articles, especially from the top here. One is called Rainmaker, and that we just talked about. The other is called Primary Bear Market, and it lays out exactly why I say that we are now in a primary bear market long before anybody else is saying that. I don't think very many people are saying that.
They aren't.
But my indicators are definitely saying that, and it's worth a read.
Okay.
But no, that's about it for now.
All right. Well, you know what? A required reading going forward into this year. And Don, you have a subscription model so people could subscribe to your letter so that they know when the sentinels flip. You inform
and if you look on Twitter, I often run these specials for $9.95 for 14 days, just to get an idea of what it's all about, so somebody can try it out for 14 days and see what it's all about.
What a great value! So Don is a veteran. He's my trading warrior brother, and I will be staying in tune. And maybe you could do me a favor, Don, and ping me when you have your other stuff flipping. And
absolutely.
So I bought an umbrella. I'm ready for the Rainmaker.
Okay. All right, Dale.
Thank you.
Well, I sure appreciate what you do here. It's I think you are the kindest person on all of Twitter, and the most generous with your time and your energy and everything else. So anyway, I hope you have a terrific day and week.
You know, I was raised by my mother. I have a lot of estrogen, so you know, I'm known as a sappy guy at Forex. I have a tear in my eye, but I'm, you know, maybe it's a drop of rain.
Well, so do I.
Maybe it's
I
only a
think we
drop
share
of
that.
rain. And Don, really, I respect your work. Thank you so much for coming
Well,
here to
thank you.
edify faith today, and we'll pick
I
it
think
up.
we share that emotionalism. By the way, that we share another thing too. I've seen your picture on there from time to time singing. Are you? Do you do karaoke?
Oh yeah, that was my marketing strategy to meet women.
All right.
I met my
That
wife
makes
doing
sense.
that. Yeah, so
I've been a karaokeer for the last 20 years myself.
yeah, it's fun to go up there and see if people ignore you totally or watch what you're doing.
Yeah. For 3
Depends
minutes,
how
you
many
get to
drinks
pretend
they've
like
had.
you're somebody famous. Yeah.
Anyway, Ed
But anyway,
Schaefer,
I'll let you
thank
get back to what you're doing, Dale. And
All right.
I thank you a million for all of this.
You're very welcome. Ed Schaefer is thanking you. A lot of people are thanking you for what you brought to the table today, Don. So
Well,
may the rain turn into a flood and overtake you with profits during this primary bear market is my hope for you and all your readers.
Thank you, my warrior trader brother.
All right, Don. Adios.
Right. Take care.
All right, Face, that's a wrap. Thank you, viewers from investing.com. Check Don's stuff out. You know, I usually don't bring people back unless I think they have a lot of value to add to our community, and Don is certainly one of those people. So have a great Thursday, dollar breaking, euro pound going up, and we'll wrap up the week tomorrow with what's happening in metals. I have a gold guy coming in tomorrow, so see everyone for TGIF. And most of all, don't just count your pips, count your blessings. You're welcome, Stephen, Susan, Kareem. See everyone tomorrow. Adios. Thanks again, Don.